So let's start Nbfc audit. See, in Nbfc audit, there is an amendment which is released here for May 23 exams and November 23 all other items subsequent. Until before, see, we have something called classification of Nbfc. Classification of Nbfc. There are so many types of Nbfcs we have. First of all, bank is something which can accept demand deposits. The primary difference between Nbfc and bank, structurally as a whole, Nbfc cannot accept demand deposit. Bank can accept demand deposit. That's the primary difference. See, Nbfcs, based on their core activity, core objective, they are classified into so many housing finance companies. Nbfcs housing finance companies, HFCs we call them as, core investment companies, non-operative holding companies, infrastructure debt fund, even insurance companies and Nbfc by definition. By definition, it's an Nbfc but exempted from registration. Getting it? First of all, when do a business activity is treated as Nbfc activity? First of all, what organizations have to register as Nbfc? See, in Caro we have seen for the first time in our audit regarding Nbfc, the discussion we have seen in Caro for the first time. In audit report chapter we have seen. In Caro, I think it is some 16th clause, 16 or 15. Some clause is there. No, some clause, 15 or 16. Which talks about whether the company is liable for registering as an Nbfc as per RBI guidelines. If so, whether the registration has been obtained. This is a question which is asked. We have seen in Tata Motors, the company is not liable for registering as an Nbfc. Accordingly, it has not registered with RBI. We have seen that. Means, whatever company you are doing audit, whether you are doing an audit of a manufacturing company or a trading company or a real estate company, whatever company you do, you need to check whether your company is liable, is responsible to register as an Nbfc with RBI. Like, what do you mean by that? All these days we are thinking Nbfc is a special business where we do something else, where we register with RBI and do something else. That's what we are thinking. But you need to check this criteria with every company. What does it mean? That is called principal business criteria. What is it actually called as? Principal business criteria. Principal business criteria. In CA Inter, we have Nbfc accounts chapter. We have Nbfc accounts chapter where we clearly explain what are all this. How to compute principal business, how to compute this criteria, how to evaluate this criteria. There are so many words which were used in Nbfc, financial words, where we practically solve questions in Nbfc accounts chapter in CA Inter. Getting it? Many of you might have done CA Inter probably in IPC's history. Some of you. If at all you have done in CA Inter stream, like if at all you registered for CA Inter before 2018, if you register for CA Inter before 2018, then it is you don't have Nbfc accounts in your syllabus. If you register into CA Inter on or after 2018, you have Nbfc accounts in your syllabus. So you will get at least exposure if at all you registered in CA Inter in 2018 or later. So you might have got an idea about Nbfc provided you have not taken it as choice. Okay, fine. So principal business, some criteria is there. It is there in our book also very clearly. What is principal business? A company will be treated as Nbfc. A company will be treated as Nbfc. If what is the condition? Company's financial asset constitute more than 50% of the total asset netted off by intangibles. Company's financial assets constitute more than 50% of the total assets. Fixed asset is not a financial asset. Investment is a financial asset. Inventory is not a financial asset. Loans and advances is a financial asset. Financial asset means something measurable in money. something which is liquid, that is called financial asset. Able to understand? Loans and advances given, investments made, these are all treated as what? Financial assets. Inventory is not a financial asset. Debtor, depending upon the transaction nature, sometimes may be treated as financial asset, sometimes may not be treated as financial asset. Suppose I sold goods, credit period is 30 days, within 30 days, if at all due date is there, it is not a financial asset. Suppose already 30 days crossed, due date crossed, now it turns into financial asset. Because no, most of the industries, once credit period is crossed, they will collect interest. They will convert it into loan. Customer balance, whatever pending balance is there, it turns into loan. Only on loan you get interest. No, will you get interest on credit sale? No. So long credit period is there, it is not a. So long there is no interest obligation, it's generally not a financial asset. Okay, it is debatable discussion. It's a very big discussion. Ignore that. Financial assets, if they occupy 50% or more, if the financial assets are more than or equal to 50% of the total assets, more than in your total business, 50%, more than 50% are financial assets. Out of your gross income, more than 50% is income from financial assets. Then what business you are doing? Predominantly, you are getting income from financing activities. What operational activities you are doing? You are saying manufacturing, but you are not having income from manufacturing. You are having more income from financial activities. You see cash flow statement so beautifully explained. Why cash flow we divide into multiple parts: operating, investing, financing. We want to know how are you running your business. Are your operating activities show negative, your financing activities show positive, investing activities show negative or positive, which means you sold some assets, you brought loans and running business. It's a clear indication. Cash flow indicates how much cash I am generating from my operating activity for which I started this business. And what are you doing? Able to understand? See, in a finance activity, positive means you borrowed something, a loan, or you issued shares or something you did. In finance activity, net result is positive means you raised funds from outside. Investing activity, positive means you sold assets. Operating activity, positive means you're doing good business. If operating cash flows is negative, financially you're not doing good. How long you continue? You established business for doing this business, and from that business you are getting negative. So I want to exactly know what you are doing, where you are getting cash. You are having losses in operations and you are honoring every payment. How are you doing? By bringing loans, by selling assets. How long you continue like this? Cash flow statement will give you this kind of picture. Able to understand? So if you are predominantly doing business in financial assets, how come you continue as a normal entity? You are supposed to register as an Nbfc with RBI. You are doing something called some financial activity. It's a non-banking financial corporation, non-banking financial activity. You're not doing banking, that's it. You're doing all financial activities. When you're doing financial activities, predominantly, you are treated as Nbfc. You must obtain Nbfc registration from RBI. This is the basic point of Nbfc. Understood right now, initially? If any business you apply, Reliance company, any company you apply, check this parameter. If at all more than 50% of the total assets are financial assets and more than 50% of the total income is financial income, income from financial assets, if the condition is and both should be satisfied. Both should be satisfied. If both the conditions are satisfied, you are doing Nbfc activity. You cannot do that activity without registration from RBI. You cannot do that activity without registration from RBI. If you want to do this kind of business, where your business comes under these parameters, both the parameters, you are Nbfc, you have to register compulsorily with RBI. If at all you want to claim you are doing business only, not this, then why your monetary amount is reflecting that? You see Reliance, their income from financial activity, their income from financial assets is not even 5% of the total income. You see Tata Motors, not even 10%. You see Tata Sons, 90% is financial income, 90% is financial asset. That's why it's a core investment company, which is Nbfc. Why? Tata companies, listed companies, ultimate holding company, Tata Sons. Why we treat it as core investment company? Why it is treated as NBFC? Because 90% criteria they satisfied. Able to understand. Now, if you satisfy this, first of all, you are treated as NBFC. First of all, you are treated as what? NBFC. Now, within that NBFC, there are so many classifications. What type of NBFC you are? You know, again in NBFC, there are so many NBFCs. Are you deposit taking NBFC or non-deposit taking NBFC? Non-deposit taking NBFC means they only give loans. They only give loans. Suppose you see Muthoot Finance, they don't take any deposits. They only give loans. Able to understand. Again, non-deposit taking NBFC. See, sometimes when I take example, I'll give a brief example. It's not exactly same. Muthoot Finance may take deposits also. Public deposits might be accepted. Able to understand. I'll come to each and everything later, slowly. Initially, I'm only giving you a brief idea. Again, this non-deposit NBFCs, non-deposit taking NBFCs are again classified into two types: systematically important, non-systematically important. Again, NBFCs which are non-deposit taking, they were again subclassified into systematically important, non-systematically important. Now, where in this classification amendment has come? Now they are saying NBFC non-deposit taking, non-systematically important. NBFC non-deposit taking, non-systematically important is called as base layer. What is it called as? Base layer. Able to understand? Whereas NBFC this one, NBFC, it may be deposit taking or non-deposit taking, but systematically important. They are treated as either middle layer or upper layer based on certain monetary norms, based on some criteria. Either they come under middle layer or they may either come under upper layer. Simply, NBFCs are now classified by RBI into three layers. There is fourth layer called top layer. That is different. That I will discuss later. Base layer, middle layer, upper layer. This is the amendment. Getting the point? Only in classification there is an amendment. Everything else is same. NBFC criteria, net owned funds criteria, everything else is same. In fact, net owned funds criteria has been revised for so many NBFCs. See, this is based on scale based classification. What is this actual classification is called by RBI? Scale based classification. Scale means what? Scale of operations, quantum of operations. Based on size of activity, now NBFCs are classified. Earlier, based on nature of activity, they classified. But now, let us not classify based on nature. Why? Whatever they do business, why we bother? Let us classify them based on how much they do. Because that is more important, right? In an economy, growing economy, that is important. How much you are doing business, that influence public. So let us classify the NBFCs into scale based criteria. Getting it? So if at all you are an NBFC, where you are not taking any deposits and non-systematically important. Getting the point? Non-systematical, sir. What is systematically important? If the NBFC financial assets are less than 500 crore, sorry, total assets are less than 500 crore. Don't write. I'll discuss all that. We don't have in that in number. We have little more changes in numbers. Okay. Non-systematically important means system. In the system, they're not that important. Why they're not important? Scale of activity is low. What do you mean by scale of activity is low? Less than 500 crore. That's why it is less. Systematically important means more than 500. Are you getting the point? NBFCs which are more than 500. Now inside this there is a clarification. Inside this, there is a clarification. This is the actual notification which resulted in amendment. This is from RBI side directly. Okay, I'm opening in the internet itself, I'm showing you. Inside this, they have explained below in a note point, it is clear. Second point if you see, okay, it is clarified that, I hope you're able to see, second point, it is clarified that existing NBFC, non-deposit taking, systematically important, having assets size of 500 crore and above, but below 1000 crore will be classified as NBFC base layer. Are you getting it? All of you? So this point is one exception, which is not covered in the materials amendments book of ICA, but can be tested. Possibility will be there that it will be tested. NBFCs, non-deposit taking, systematically important, getting it, having asset size more than 500 but less than 1000, which is not treated as middle layer. Actually, it comes under either middle layer or upper layer because it is systematically important. Right now, it is treated as what? Base layer. Are you getting it? No, don't worry, I am not concluding. I will go very in depth in this. I am just giving you, introducing you the words. Getting it? Now, earlier, how do we classify NBFCs based on nature of activities? Deposit taking NBFC, non-deposit taking NBFC. That's it. Non-deposit taking NBFCs are again subclassified into important systematically, not systematically important. All NBFCs which are not systematically important are classified straight away under base layer. All NBFCs that were non-deposit and systematically important or deposit taking NBFCs are straight away classified under middle layer or upper layer depending upon again some criteria. Are you getting the point? And there is something called top layer which is empty. RBI will keep selectively from upper layer to top layer. If at all RBI thinks so, NBFC is very, very significant, we need direct focus, direct regulation, they may classify one NBFC, they pick one NBFC and keep it in top layer. Top layer is generally empty. In top layer, if an NBFC comes, what does it mean? RBI selected that NBFC into the top layer. So now NBFCs are classified into base layer, middle layer, upper layer, top layer. This is governed by criterias. Yes or no? What is base layer? Non-deposit taking, non-systematically important, all that comes under base layer. Systematically important, non-deposit taking or deposit taking NBFCs come under these two depending on some criteria. Sir, what is top layer? Which will come? Zero. Nothing is there as of now. When it will come, RBI will select that. You and me need not worry. Are you clear? So this classification they newly has released. Now what is this impacting? This classification is impacting what provisions in NBFC law? That also we will discuss specifically. Getting it? Now in NBFC, we are going to discuss various things. First one, what we are going to discuss is what do you mean by NBFC? When a business is treated as NBFC, just we discussed briefly, principal business activity. Okay. What are various types of NBFCs? What are the NBFCs? What are the businesses which fall under NBFC criteria but are exempted from registration? We are going to discuss exemptions for NBFCs which are exempted from registration. Then we are going to discuss about directions issued by RBI. In this chapter, we are going to discuss 4 set of directions. 1. NBFC Auditor's Report, Reserve Bank Directions 2016. One direction that we are going to discuss is what? NBFC Auditor's Report, Reserve Bank Directions 2016. Another direction, NBFC Non-Deposit Taking, Non-Systematically Important, Reserve Bank Directions 2016. Another direction, NBFC Non-Deposit Taking, Systematically Important and NBFC Deposit Taking and NBFC, deposit taking and systematically important non-deposit taking. Getting it? Reserve Bank, Directions 2016. Another set of direction that we are going to discuss is NBFC, Acceptance of Public Deposits 2016. Reserve Bank, Directions 2016. Everywhere this word is common. Reserve Bank directions, Reserve Bank direction, Reserve Bank direction. Starting letter NBFC, NBFC, NBFC is common. What is changing? For accepting public deposits, non-deposit taking, non-systematically important. Deposit taking, systematically important, non-deposit taking. For deposit taking NBFCs, all NBFCs which are taking deposits and all NBFCs which are not taking deposits but are important systematically, they both are covered under one set of directions. NBFCs which are not taking deposits, not important also, they are covered under one direction. Now to all these NBFCs, auditors were there, right? They need to give audit reports, right? What they need to cover in audit reports, what are their additional responsibilities, reporting responsibilities, that is covered in audit report directions. NBFC auditors report, Reserve Bank directions 2016. Able to understand, all of you. All these directions were supplemented by, not substituted, understand, were supplemented by, they were all supplemented by this direction. This is additional direction which is issued recently. That is what we are discussing as amendment. What is this direction? Regulatory framework for NBFCs, scale-based approach. Directly we'll see the amendments, what word they have used. They used only one. So a revised regulatory framework for NBFCs. Okay, so they have issued regulatory framework, revised regulatory framework. So there is no such direction. It is just a supplementary regulation. It is just a supplementary regulations. You see here, they have given revised regulatory framework for NBFCs, which is a scale-based approach. Scale means obviously quantum of NBFCs, size of the NBFCs. Scale means size of the NBFCs. Earlier NBFCs are classified based on nature of activity. Now NBFCs are being classified based on size of the activity. That's it. Got clarity? Next. So we'll continue the balanced discussion in the next class. There is so much in this. We are going to learn so many new models, how new NBFCs, like so many models, how new businesses were evolved in NBFCs, what are the list of NBFCs that are there in India, all that practically we will see in the next class. Okay, take care. So we'll continue. So in the previous session, we have discussed a brief overview on where exactly the amendment has come. Correct? And I told for every company, whatever business they're doing, we should apply NBFC criteria to them. We should apply that criteria because CARO reporting is there now. In CARO reporting, we have a clause specifically for this, which is asking us to apply NBFC criteria and check whether the NBFC is liable, whether the company is liable for NBFC registration. Now, what we have seen is principal business criteria, something where asset criteria, income criteria we have seen. If both are complied, then the company is said to be engaged in NBFC activity. And it must get NBFC registration, without which operating as such is violation of RBI guidelines. Operating as such, which is satisfied this criteria, principal business criteria, and operating as such without NBFC registration from RBI is a violation of RBI guidelines, accordingly punishable under RBI law. Getting my point? Now, like what I told, now NBFCs are broadly classified into deposit taking NBFCs, non-deposit taking NBFCs. Again, within non-deposit taking NBFCs, we have something called systematically important and we have something called not systematically important. NBFC, non-deposit taking, non-systematically important, will straight away come under now base layer. Right now, NBFCs are now, earlier they used to be classified as deposit, non-deposit, systematically, non-systematically, all this, one, based on the activity they classify. Like they classified NBFCs based on activity come scale. Systematically word is there, right? There is nothing but scale based. When do I say an NBFC is systematically important? If it has an assets of more than 500 crore, when monetary amount is involved in determining the classification, when monetary amount is involved while determining the classification, we are indirectly giving importance to scale, size of NBFC. Whereas right now, how NBFCs are classified? Only based on size. Only based on size. Base layer, middle layer, upper layer, top layer. And top layer is actually empty. RBI will pick certain NBFCs and keep it under top layer. If at all an NBFC comes in top layer, RBI will have a direct monitoring. So that is very risky. An NBFC coming into top layer is a very risky thing for that NBFC. It's not risky thing. It is too complicated for them, because RBI will be continuously monitoring them, continuously asking so much of information. Able to understand? So, and regarding the NBFC, RBI has issued various directions. In this chapter, we will be hearing these directions word many a times. Like it will be part of sentence, right? It will be very confusing generally. If at all you don't understand this at a broader scale, if you just read it as part of sentence, it will be very confusing. Like in many of the paragraphs that we are going to read in this chapter, in between the lines, they uses these words. What are the directions that are issued by RBI in regard to NBFC? They have issued directions, first of all, related to auditor's report. So the direction name is what? NBFC Auditor's Report, Reserve Bank Directions 2016. Okay, next. For non-deposit taking NBFCs, non-systematically important NBFCs, non-deposit taking and non-systematically important, for them alone, separate directions were given, because they're small businesses, right? Yes or no? Now tell me, these NBFCs come under what? Base layer. Correct? Now, those NBFCs which fall under base layer, for them, NBFC, non-deposit taking, non-systematically important, or Reserve Bank Directions 2016 were issued. So these NBFCs have to comply with these directions when they are carrying out the activities. Able to understand? Then NBFCs which are either deposit taking or non-deposit taking but systematically important. For deposit taking NBFCs and non-deposit which are systematically important, they have many more additional regulations, because these are big NBFCs. Moreover, they are accepting deposits from customers. Able to understand? Now, for them, Reserve Bank has issued separate directions. Non-systematically important NBFC, separate direction. Systematically important NBFC, separate direction. See, that is not systematically important. Smaller NBFC, why should I regulate them so severely? Let me issue separate guidelines for them. I will regulate them, but not so severely how I regulate deposit taking NBFC, how I regulate systematically important NBFC. Able to understand? So they have given a separate direction for this. Then certain NBFCs, because first of all, basically understand, NBFC is a company registered under Companies Act. A bank is a company registered under Companies Act. Insurance company, all these are companies basically. And we have 73 section in Companies Act which talks about acceptance of deposits from public. Now you see here, if you observe here, we are talking deposit taking NBFC, no? Deposit taking NBFC means what? Where you can keep some term deposit or some recurring deposit with the NBFC. Here, deposit taking means deposits from customers. Understand? Deposits from customers. Whereas there is another directions. What is the directions? Acceptance of public deposits. What is it? Acceptance of public deposits. Public deposits means what? Section 73 of Companies Act. So by virtue of Companies Act, an NBFC can raise money from public for the sake of operations, expansion, all that. Remember, acceptance of public deposit is a sources of finance, one type of source of raising money from the public. From public, I can issue additional share capital and raise money. I can issue debentures and raise money, bonds and raise money. Another way is deposits. Another way is what? Deposits. Able to understand. For this, NCLT has given certain guidelines. RBI, in case of NBFCs, will give certain guidelines. That is a best example is NBFC. If you recollect CARO, in that 5th clause, okay, CARO reporting 5th clause, whether the company has accepted any deposits from public. If so, whether provisions of Companies Act 73 to 76 are complied. Whether the guidelines issued by Company Law Board or NCLT are complied. Whether guidelines issued by RPI are complied. Guidelines issued by RPI applicable for which companies? NBFCs. Able to understand? Why do RPI involve if Adani Group is raising deposits from public? They don't involve. So in CARO, 5th clause, 3rd point, whether RBI directions are complied. This is in context of which type of companies? NBFCs. Because for NBFCs, when they are accepting deposits from public, RBI has issued certain additional directions in addition to Companies Act. You know, in Companies Act, there are already so many restrictions. How much money a company can raise from public, maximum money in the form of deposits. What are the rules and regulations relating to that? For how long deposits can be accepted? What should be the maximum rate of interest, minimum rate of interest? So many rules were already given under company law. In addition to that, the RBI has given even more additional regulations, even more additional guidelines, directions for NBFCs. Got my point? So we get this, we get these words, these sentences in various questions. Getting it? So if you got an idea right now itself, when you're reading it later, okay, that entire 2 lines is nothing but a one direction. In NBFC, students confuse regarding this and leave the chapter. Okay, because majority, they don't understand the structure of the chapter. The main reason behind NBFC audit, why many feel little tough is, only initial 4 or 5 concepts they will understand. Once it crossed, many students don't understand NBFC audit because of these sentences which create mess. Got my point? That's it. So now, without any delay, we'll discuss simultaneously. We also discuss amendment. Now, by the way, okay, when I come to NBFC classification, I'll come there. Okay, like or else we'll see here. You see here, we'll directly discuss the amendment classic, or else once I start classification, I'll come back here. Okay, first one. So write about definition, criteria, registration of NBFC. The provisions discussed are under 45I, subsection F, Reserve Bank of India Act. It defines what is a non-banking finance company. Non-banking finance company is a company which is a financial institution. It's a financial institution which is a company. It's a non-banking institution which is a company which has its principal business of receiving deposits under any scheme, arrangement, in any other manner, or lending in any other manner, where they have a principal business. What is a principal business? Accepting of deposits under any scheme or arrangement in any other manner, or lending in any other manner. Such other NBFC or such other class of institutions as the bank may, with the previous approval of the government, by notification the official gazette. Bank means what? Reserve Bank. Sometimes in the NBFC law, they simply uses the word bank, which means which bank? And Reserve Bank. Getting it? So NBFC, RBI definition, it's a financial institution basically which is a company. It's a NBFC which is a company whose principal business is receiving deposits or lending in any manner. 2 criteria, either receiving deposits or lending in any manner. And such other banking institution or class of institution which RBI specify that they are NBFCs. Means this is declared list. What is it called as? Declared list. In GST you have declared services. Yes or no? Similar to that. Means, sir, here principal business criteria satisfied, that and all not required. It's declared by RBI as NBFC. That's it. By official gazetting, RBI declared them thus as NBFC. You and me need not fight for principal business all that criteria because that's a declared NBFC. Able to understand. All of you. There are many NBFCs where RBI has clearly declared them as NBFCs. Peer-to-peer lending NBFCs. Peer-to-peer lending NBFCs. Account aggregator financial institutions. There are new NBFC business models which are declared by RBI as NBFCs. Able to understand? Now, what do you mean by principal business? Principal business means in order to identify a particular company as NBFC, whether a particular company is dealing in NBFC, RBI will consider both assets criteria, income criteria. Getting it? From the last audited balance sheet of the company to decide its principal business. So whatever latest audited balance sheet is there, based on that we calculate. What is the criteria? If the NBFC financial assets constitute more than 50% of the total assets. Okay. By the way, net of intangible assets. When you are calculating total assets, net of intangible. Total assets means only tangible. Out of them, more than 50% is financial asset. Getting it? And more income from financial asset itself is occupying majority of your income. In your gross income, more than 50% income is from financial asset. By the way, here, probably income means turnover. Credit side of the P&L is there, no? That one. Credit side of the P&L, not profit. Able to understand? Not profit. How come you split profit? How come you split profit? How much profit ultimately I received from financial activity? Ultimately I received from non-financial activity. You can't split. It's impossible because majority of the expenses are incurred commonly for the business. Yes or no? So that split is not possible. Income means obviously turnover criteria. Nothing but turnover criteria. A company which fulfills both these criteria shall qualify as NBFC and would require to be registered by RBI, would require to be registered as NBFC with RBI. Are you clear? Now, since your company principal business is NBFC activity, you are supposed to register with RBI, right? Just because you are involved in principal business, which is an NBFC activity, you don't get the permission to registration. You should comply with one more condition. Your net owned funds. What is it? Net owned funds must be, 2 crore. Actually, right now, what is a net owned funds criteria right now? 2 crore net owned funds should be there. Okay. So, original limit is 25 lakhs. Maximum net owned funds criteria is 200 lakhs. But right now, anyhow, the revised limit is what? 2 crore, which was revised in 1999 itself. Getting it? As RBI may notify in the official gazette. And you know what? This net owned funds criteria is increased to 10 crore by NBFCs in a phased manner by 2025 or 2026. RBI has a released instruction clearly saying you see here, NBFCs, this is called NBFC ICC means what? Investment Credit Company. MFI means Microfinance Institution. Factors. They have current NOF what criteria? 2 crore, 5 crore and 5 crore. Whereas in Northeast region 2 crore only. Okay. Then by March 31st, 2025, they need to maintain this much net owned fund criteria. By March 27, they need to increase it to 10 crore net fund criteria, net owned funds criteria. So RBI is gradually increasing their net owned fund requirement. Able to understand? Again, Net owned fund means nothing but capital requirement. Net owned fund is nothing but similar to what? Capital requirement only. Capital, my own funds means what? Capital. In a business, my own funds means what? Capital. Net owned funds means capital, nothing but. You know, the capital requirement is different for NBFCs which fall under the base layer. Capital requirement criteria is different for middle and upper layer. In other words, NBFCs which are non-deposit taking, non-systematically important. For them, net owned funds criteria 2 crores is enough right now. Forget about the going increased limit. That is not there in our syllabus. I just to show you for your understanding. Getting it? 2 crore. NBFCs which are systematically important non-deposit taking or deposit taking NBFCs which will fall under right now revised scale based criteria, middle layer or upper layer. For them, 2 crore criteria will not apply. For them, 15% of the risk weighted assets they need to maintain. How much they need to maintain? 15% of the risk weighted. If you recollect bank audit, a bank has to maintain capital requirement of 9% of risk weighted assets. I showed clearly and I told MCQ possibility is there. Getting it? When we are discussing audit of liabilities, I told this. For a bank, it is 9% capital requirement adequacy ratio. For NBFC, what is capital adequacy ratio? 15% of risk weighted assets. What are the risk weights? All that we will be discussing below. Able to understand? All of you? So, whatever net owned fund criteria is there here, net owned fund criteria, here it is not clarified, it is clarified later. But I am giving you at the beginning itself for a better understanding. So, for them, net owned fund criteria is 2 crore. This criteria is applicable for base layer NBFCs, nothing but indirectly non-deposit taking, non-systematically important NBFCs. Able to understand? All of you? Now, so a company which is incorporated under Companies Act, which is desirous of commencing NBFC activities, can apply to Reserve Bank of India in prescribed form with necessary documents. RBI issues certificate of registration after satisfying itself regarding conditions. Now, what directions RBI will issue to the NBFC? This question can be asked as a 3 marks. Write about directions that are given by RBI to the NBFCs. So RBI has given directions on various things for NBFCs. One is while accepting public deposits, they have given directions. Prudential norms regarding capital adequacy they have given. Income recognition directions, asset classification, provisioning directions, risk exposure norms, other measures, and reporting. What NBFCs have to report? What auditors have to report of the NBFC? So many directions were given by RBI in so many contexts. Able to understand? Not only that, directions were also issued to the auditors to report on non-compliance with RBI Act and the regulations to RBI Board of Directors and shareholders. The auditors have to give a report to Board of Directors of NBFC, to the RBI as well as to the shareholders. Shareholders means anyhow we give audit report. To Board of Directors we give a special report. To Board of Directors of NBFC, auditor has to give a special report regarding non-compliance. What are the contents of that special report? We have a question. We'll discuss it last. Able to understand? So we have that RBI, NBFC, auditors report, Reserve Bank directions. We have a question. There we will be discussing. Got my point? Now, what are various types of NBFCs? First of all, an NBFC can involve in which types of businesses? I know principal business, financial asset 50%, financial income 50%. I know. Technically, what businesses they can do? NBFC can do a business of loans and advances. They can do a business in acquisition of shares, securities, bonds, debentures, all that. Leasing. Or NBFC can involve in hire purchase business, or insurance business, or chit fund business. So typically, if at all you are carrying all these businesses, you are nothing but NBFC. Able to understand? Loans and advances is NBFC. Suppose there is a company called PNB Housing Finance, LIC Housing Finance, yes or no, National Housing Bank. Able to understand? All of you. All these are housing finance companies which are involved in loans and advances. But you know what? They are exempted from NBFCs. They are exempted from NBFCs. Like first I will explain which NBFCs are exempted. Which NBFCs are exempted. See, if a particular financial institution, first let me show you list of NBFCs as per RBI. List of NBFCs. So this is a revised list as on 31st December. So list of NBFCs and asset reconstruction companies whose certificate of registration has been cancelled. Okay, why we require this cancelled list? Let us look at direct NBFCs which are registered. Cancelled means what? Earlier they registered with NBFC, later it was cancelled because of so many irregularities or maybe criteria non-compliance, whatever. So list of NBFCs registered with RBI. Oh my god, it is there 280 pages. So these many companies. You see, you can see here, they have given here classification also. They have given classification. So if ICC word is there, it's an investment credit company. It falls under, oh my god, RBI has given layer also. They classified with layer also. It's good. So they have classified it as layers. Investment credit companies, what are all falling under upper layer? What are all falling under middle layer? Actually, here the list is given in not even that format. Alphabetical format is also not there. Upper Indian, where, which format, which order they followed? Upper layer, middle layer, all are middle. Okay, fine. Layer wise they filtered. Got clarity? They filtered layer wise. First they have given NBFCs which fall under upper layer. First they have given NBFCs which fall under upper layer. In that only Tata Sons comes under upper layer, which is a core investment company in India. It's a core investment company, Tata Sons, because it's an NBFC basically. Predominant business is what? Investing in companies. You know what is a criteria? What is the definition of core investment company? If 90% of the the 90% of the total assets are represented by investments. Getting the point? Then we call that company as core investment company. Core activity is what? Investments. So only Tata Sons comes under, there are so many core investment companies in India. Only Tata Sons comes under upper layer. And you see, in NBFC upper layer, most of the companies are investment credit companies. Most of them are what? Investment credit companies. Then middle layer list they have given. Middle layers are so many NBFCs that are there under middle layer, which are also regulated by RBI severely. Oh my god. There are how many NBFCs? 289 pages means I'll go to 289 page directly. So we'll go to 289 page directly. How many NBFCs we have in India right now? 9,500 NBFCs were there in India. 9,500, 9,471. I'm rounding up to 500 for easy remembrance. You see, 5 paisa, you know, 5 paisa. You know, it's actually where it's actually a demat broker, where you can open demat account. They recently ventured into P2P platform. It's a P2P, peer-to-peer lending. I'll tell you what are all they. Okay, what are all that platforms I will discuss. So there are so many NBFCs. See, like what order they followed is, in upper layer, alphabetical order they have given. In middle layer, they have given alphabetical order. In base layer, they have given alphabetical order. You see, top layer list is not given. Because RBI will have to hand pick. RBI has to do a hand pick. Getting it? Top layer, what NBFCs will come are hand picked by RBI, nothing but. Okay. So these many NBFCs we have. Apart from this, we have asset reconstruction companies. We have asset reconstruction companies which are approximately some 28. And you see here, they have given clearly NBFC. So NBFC, non-deposit systematically important. Non-deposit, if it all, they simply mention ND means what? It is not systematically important. Correct? Huh? Then deposit taking, core investment company, investment credit company, IFC means infrastructure finance company, infrastructure debt fund, peer-to-peer, account aggregator, microfinance institution, non-operative financial holding company, RNBC, residuary non-banking company. This is there in our book also, residuary NBFC. They have given so many classifications. If at all you do not fall under any of the specific name, then you are treated as residuary NBFC. You are treated as what? Residuary NBFC. Then COR means certificate of registration. Broadly speaking, how many types of NBFCs we have? Only these types. Are you getting the point? Now, so what are peer-to-peer? What are all this? We will see that. I don't know, in the RTP or somewhere I've seen, they ask define core investment company, which is not given in ICA book. Define infrastructure debt fund, define core investment company, define what are all. I think it is not given in the ICA book. Getting it? We'll see that also. In the ICA book also we will see once whether it is given or not. Now, I showed you what are all list of NBFCs. You know, which RBI has already classified as upper layer, middle layer, something. How this classification will be done? Base layer, middle layer, upper layer, we understood. Now, between middle and upper layer, how classification will be splitted? How when an NBFC will come under middle layer exactly, when an NBFC comes under upper layer exactly, RBI has given for that also, you know, they have given for that also, you know, a criteria. See here, they have given criteria for this also. Methodology. You know, the upper layer shall comprise of those NBFCs which are specifically identified by Reserve Bank, warranting additional regulatory requirement based on set of parameters and scoring methodology as provided in this circular. The top 10 eligible NBFCs in terms of their asset size shall always reside in upper layer irrespective of factors. Top 10 NBFCs in India will straight away come under based on asset size. Top 10 NBFCs based on their asset size straight away comes under upper layer. Top 10 only, no? Able to understand. Remaining NBFCs, will they fall under upper layer? Will they fall under middle layer? They have given certain parameters. They have given some methodology to identify whether it is upper layer or not. We'll see the appendix. You see here, size and leverage, total exposure, on and off the balance sheet item. For that, what is the weight given? Parameter weight. Okay. Intra-financial system, lending to financial institution, holding of securities issued by financial institution, net market to mark-to-market reserve, you know, reverse repurchase agreements with other institutions. So many criteria they have given. They have given so many criteria. So total weight is 100. Probably in the above they might have given the breakup. You see here, upper layer shall be populated with NBFCs identified by way of parametric scoring methodology comprising a qualitative and quantitative parameter supervisory judgment. The quantitative parameters shall have a weight of 70% and 30% respectively. Scoring methodology for identification. So they have given here. Top 50 NBFCs excluding top 10. Top 10 are straight away upper layer. Okay, based on their total exposure, including credit equivalent to half the balance sheet exposure. That is one criteria. NBFC is designated as upper layer in the previous year is an upper layer NBFC. NBFC is added to set by supervisor using supervisory judgment. Probably RBI will appoint some supervisor according to these three. Now, credit components of parametric analysis they have given. You know, for this 30% weightage is given, for this 70% weightage is given. This is completely taken care by RBI, not there for us CS. That is the reason why it is not given in our book. But I am showing you how when an NBFC comes under upper layer or middle layer, because now for us this right away say NBFCs which are deposit taking, NBFCs which are non-deposit taking and systematically important. All these NBFCs will straight away come under upper layer or middle layer as the case may be is what they told. What do you mean by as the case may be? Will it come exactly under middle layer or upper layer? They have given some parameter. If NBFC is satisfying these parameters, they will come under upper layer. If they do not satisfy these parameters, then they come under middle layer. Simple logic. And top 10 NBFCs by default are always upper layer, irrespective of the parameter compliance. Able to understand. Otherwise, upper layer will be empty, no? If at all this criteria is not, you already made top layer, which is empty. If upper layer also become empty, why? So, they want something in upper layer. So, they for that, what criteria have given? Top 10 NBFCs based on asset size in India, which are listed in India or by default NBFCs. Clear or not? All of you? Here 11 only were there in the top 10. Upper layer NBFCs as per RBI, only 11 were there. And Tata Capital Financial Services star mark they have given. What is the purpose of star mark? Somewhere at last they would have given. Okay, I think star mark indicates maybe something they would have clarified. Recently merged or demerged or something would have been clarified. Okay, star mark they defined here. Additional certificate of registration to commence and carry on factoring. Right now it is only non-deposit taking systematically important. Now they are going to commence factoring business also. So they are going to commence factoring business also. That's why they have given some star mark. Anyhow, in the upper layer right now we have how many? Only 11. Probably they would have come by default because top 10 should be in the upper layer. No. So that would be the reason. Next. Write about NBFCs which are exempted from registration. Now see, don't confuse between various types of NBFCs and exemptions. Exemption means what? First of all, when do I give exemption? When the law apply, I can give exemption. If law do not apply, there is no question of exemption. Yes or no? If law itself do not apply, there is no question of exemption. So exemption apply when the law is applicable. Now, you know, these companies, these institutions, understand these are all financial institutions. All these are financial institutions. These institutions, they are satisfying principal business definition criteria. They are satisfying the principal business criteria. They satisfy asset criteria, they satisfy income, both. They are logically NBFCs. They have to register under 45 IA of the Reserve Bank of India Act. But they are exempted. Why? Because they are regulated by another regulatory body directly. How many multiple regulators will regulate me? One regulator is enough, no, for one person, for one entity. If I'm a telecom company, it tries to regulate me. Insurance IRDA is there, banks RBI is there, NBFCs RBI is there. Why should I be governed by multiple regulators? So, housing financial institutions which is regulated by National Housing Bank. And you know what? National Housing Bank is a subsidiary of RBI. It's a subsidiary of RBI. NABARD, NHB, all these are subsidiaries of RBI. Next, merchant banks. Merchant banks, they are exempted. Getting it? Because they are exempted by SEBI. What are merchant banks? Stockbroking, underwriting companies. Getting it? Stock exchanges, they are exempted. Because stock exchanges also, stock exchanges also, predominant income is what? Income from investments, income from brokerage. Correct? Huh? Companies engaged in stockbroking, sub-broking, they do satisfy NBFC definition. Yes or no? Because brokers and all, what is the income they get? Commission. Brokers get what income? Commission. Venture capital funds, which are regulated by SEBI, exempted. Nidhi companies are regulated by MCA. Insurance companies are regulated by IRDA. Chit companies, MFIs, microfinancial institutions. SRCs, securitization and reconstruction companies, mutual benefit companies, mortgage guarantee company, core investment company. See, mutual benefit companies means probably mutual fund companies, collective investment scheme companies, all that might come. Mortgage guarantee company means, see, there are certain companies, mortgage guarantee company means what exactly they do. I think above all businesses similar to banking, non-banking, normal businesses. Mortgage guarantee company means, see, suppose I want to get a housing loan. Bank can give me only 70 lakhs loan, but I want 1 crore loan. I want 1 crore. Since I don't have enough security, bank is not giving me more than 70 lakhs. Additionally, 1 rupee also they are not giving. What I do is I'll go to a mortgage guarantee company. Hey company, please give me guarantee to me. No, please give guarantee to bank on behalf of me. For that, I'll pay you some charges. This mortgage guarantee company will take additional risk and evaluate the person, credit worthiness, all that, will take additional risk and then guarantee to the bank that you give them 1 crore loan. If the fellow default, I will pay you. For this, the mortgage guarantee company will collect from me charges. So that's called mortgage guarantee company. Able to understand? That is actually Nbfc and still exempted. Core investment companies are exempted, provided which core investment company? Core investment company which is not systematically important. Core investment company which is not systematically important. Again, you know, here there is another variation. Generally, systematically important, non-systematically important. What is the criteria basically is 500 crore. For core investment company, the criteria is 100 crore. Only for core investment company, what is the criteria to divide the core investment company into systematically important, non-systematically important? Core investment is also basically a non-deposit taking. Getting the point? Or maybe a deposit taking, non-deposit taking generally, but Tata Sons is there. Now there is a company called Tata Sons. It is not accepting any deposits. Tata Sons is constituted by capital, own capital of Tata, family. Getting it? So 100 crore is the criteria. If a core investment company is having more than 100 crore total assets, then it's a systematically important core investment company. If a core investment company which is not falling under systematically important, then it's a non-systematically important core investment company. Normally for all other NBFCs, what is the criteria to differentiate them between systematically important, non-systematically important is 500 crore. Able to understand? All of you? Only for core investment company 100 crore criteria. For all other NBFCs, what is the criteria? 500 crore. On that basis, we classify, is it important or non-important? Only for core investment, 500 crore criteria will not apply, 100 crore criteria will apply. Are you clear? And what is the point now we are learning, exemptions. Which NBFCs are exempted? Core investment company is eligible for registration, liable for registration. However, if a core investment company is an investment company where it is not systematically important, which means if the core investment company size is less than 100 crore, then it is exempted from RBI registration. Which means remaining all core investment companies where the asset size is more than 100 crore are liable for RBI registration. Are you getting the point? Suppose I started a private company. Main objective of my private company is investments. I don't want to have investments in my name. I want to invest in this company, and through that company I'll route to remaining companies. Getting it? Mine is a very small business. I just invested 1 crore. That 1 crore I split into 10 companies, 10 lakhs. So this is the core investment company, ultimate holding company for the remaining 10 companies. Now 1 crore, why you want to regulate me? Able to understand? So core investment companies with an asset size less than 100 crores are exempted from RBI NBFC regulations. So you see here. So core investment companies are exempted. Which core investment companies? Those core investment companies which are not systematically important core investment company as defined by RBI in core investment company Reserve Bank directions. So for core investment company, Reserve Bank has given separate directions that I think I didn't cover in the earlier thing. When I'm explaining total number of directions, I only spoke about 4 directions. Core investment company Reserve Bank directions were again separately given. Getting it? As per those directions, non-systematically important core investment companies are exempted from RBI registration. Clear or not? Then alternative investment fund. If you want to understand what are these, you can Google it very easily. Instead of discussing class, just what is alternative investment fund, you will get a definition. Investopedia, clear cut, some definition you will find. Some example you will find. It's very easy. Now in exam, how a question can come. Write about list of NBFCs which are exempted from registration. 4 marks. You need to write any 6 points. You need to write how many? Any 6 points. 4 marks question. 6 marks question can be framed. What are the NBFCs that are liable for registration under RBI? And also give a list of NBFCs which are exempted from registration. So they'll ask you registration criteria, principal business criteria. First question, whatever we have seen. Okay, what is NBFCs which satisfy principal business criteria are liable for registration? So principal business means what you write. And all the NBFCs shall register under 45 IA with the Reserve Bank of India. You just have to briefly write that. And the following are the list of NBFCs which are exempted from registration. You need to write this. For that 2 marks weightage will be given. For this 4 marks weightage will be given between 6 months. Able to understand? All of you. Then we need to discuss. And please note that it is mentioned that mortgage guarantee companies have been notified as NBFCs under 45 IF3 declared list. Under declared list, mortgage guarantee companies notified as NBFC. Core investment company with asset size less than 100 crore and those with asset size 100 crore above not accessing to public funds are exempted from registration with the RBI. One more additional point we learned. Core investment companies whose asset size is less than 100 crore, we know that it is non-systematically important, which is exempted from NBFC. And not only that, through a note point, RBI has given guideline that even though if the core investment company is having 100 crore and above, but not having access to public funds, a core investment company where public interest is not involved, they are also exempted from registration. Now, based on this, you need to clearly understand RBI want to regulate only those NBFCs where public interest is involved. Are you getting the point? You know, on this, one student asked me a doubt after listening to this. Sir, mortgage guarantee company, it may not have public interest, no? Why then RBI kept it under declared list? How can you say it is not public interest? It is. Mortgage guarantee company is giving guarantee to a bank, which is giving loan to a person. Bank is giving loan out of the deposits which they borrow from public. Indirectly, mortgage guarantee fund is indirectly telling the bank to give public fund. Indirect influence is there in the public funds of the bank, no? Able to understand. But we need not break logic for everything. There are some, for everything, for every of these guidelines, the Reserve Bank, some committees will be there inside that. They would have done proper research and only after a thorough research they would have brought them in their list, in the regulatory purview. Clear? All of you. Now, all these, especially this entire point is relevant for MCQ or case-based MCQ. If at all these points, especially these points are tested, NBFC having more than, core investment company having more than asset size 100 crore and not having access to public fund is exempted from NBFC. And NBFC which is having less than 100 crore anyhow is exempted. It's a core investment company, non-systematically important. Able to understand? All of you. So these are exemptions from NBFC's registration. Okay. Then we will have to discuss how NBFCs are being categorized by RBI. This is where amendment has come. Base layer, upper layer, middle layer, that amendment. How RBI is classifying NBFCs. Right now, how RBI is classifying scale-based. Scale-based. Correct? All of you. That's it. So, we'll take a break and come back and then discuss. Getting it? So, once we finish this, then I will go to amendment part once again and finish that. With that, we are discussing this with amendment. See, understand, deposit taking, non-deposit taking, systematically important, non-systematically important is not replaced. Understand? It is there. In addition to that, scale-based classification is additionally given. It is not replacing that. Directions, all that are same. See, the RBI has not given base layer directions, middle layer directions, upper layer, they didn't give directions separately like this. Non-deposit taking, non-systematically important, 2016 directions. Deposit taking, non-deposit taking, systematically important directions, 2016. Acceptance of public deposit direction 2016, audit report directions, core investment company reserve bank directions 2016, all are exactly there even today. Able to understand? In addition to that, they have given a classification that base layer, upper layer, middle layer. Right now we are classifying between deposit taking, non-deposit taking, systematically important, non-systematically important, fine. In addition to that, you see, this list itself is an evidence. This list itself is an evidence that RBI did not classify. Old classification is still there. In addition to that, new classification is also given to it. So NBFC is based on activities. What they are exactly doing, based on directions, they classified like this. Based on scale, they classified like this. Both are prevailing. We'll see the first page to have a better clarity. So category of NBFC and layer of the NBFC. What is NBFC category? Means, is it non-deposit taking, deposit taking, systematically important, non-systematically important, core investment company, what? What is classification of NBFC? So category is different, classification is different, layer is different. All the three were there. We have questions on all the three. What is classification of NBFCs? That we will see. Types of NBFCs. Getting it? We have that in activities. You see, classifications by kind of activities, what they do, by category, what they do. Now we have another additional thing called by layer. Got my point? All of you. That's it. Okay, we'll take a break and continue.